July 25, 2026. A $200 billion supply deal, largest in semiconductor history. The empire that was supposed to die just struck back. Samsung and Broadcom sent a shockwave through the global chip war. But weeks before, Samsung was bleeding. Its rival, SK Hynix, had raised $26 billion on the Nasdaq, the biggest foreign listing America had ever seen. So how did a dying empire engineer the deal of the century? Samsung spent decades building an untouchable semiconductor empire, but the rapid rise of artificial intelligence exposed a profound, systemic blind spot. By the end of 2024, the cracks in the foundation were visible. Samsung's memory division revenue fell 12% to $31 billion, causing operating profits to slide 18%. The losses stemmed from a technological rout in high-bandwidth memory, the specialized silicon required to run advanced artificial intelligence models. Samsung struggled to manufacture stable chips. By the third quarter of 2025, its global HBM market share collapsed to just 19%. Its chief competitor, SK Hynix, captured 48% of the market, solidifying its role as the primary supplier to NVIDIA. The financial damage triggered institutional panic. Analysts at Goldman Sachs and Morgan Stanley openly circulated research notes framing the decline in terminal terms, calling it an obituary for Samsung's memory business. The bleeding escalated into early 2026. Consolidated semiconductor profits dropped another 14% year over year. Inside the cleanrooms of Pyeongtaek, engineers faced severe yield challenges. Wafer-level yields on advanced memory nodes stalled near 68%, far below the 80% benchmark set by rivals. These manufacturing defects led to delayed product qualifications, leaving Samsung locked out of the AI boom. For the first time in a generation, the South Korean giant was dangerously vulnerable. The company entered this high-stakes period with zero momentum, fighting a war of survival from a position of weakness. On July 10, 2026, the ultimate humiliation materialized on the public stage. Samsung's fiercest rival, SK Hynix, debuted on the Nasdaq under the ticker SKHY. It priced 177.9 million American depositary receipts at $149 each. The offering, oversubscribed 7 times over, raised an unprecedented $26.5 billion, becoming the largest first-time U.S. share sale by a foreign firm in financial history. On day one, the stock surged 13%. This was a public coronation. While Samsung struggled with stalling yields in South Korea, global capital rushed to its competitor. The long-standing hierarchy of the peninsula had shattered. For decades, Samsung treated SK Hynix as a secondary player, an afterthought in the global market. Now, that same rival claimed a post-IPO valuation of $140 billion, championed by Wall Street's elite syndicates. Samsung's leadership watched from Seoul as their legacy of absolute dominance evaporated on trading screens, leaving the tech giant exposed, isolated, and visually left behind in the global race for AI supremacy. The turnaround did not begin with a breakthrough in Seoul. It began with an urgent demand crisis in San Jose. Broadcom was riding an explosive wave of artificial intelligence hardware expansion. Its AI-related revenue had doubled in a single year, climbing to $6.8 billion. The company's custom designs were powering Google's TPU accelerators and Meta's massive language model networks. But Broadcom hit a bottleneck. TSMC was choked with orders. Intel could not scale fast enough. Broadcom needed massive, guaranteed silicon manufacturing capacity, and it needed it immediately. In February 2026, Broadcom executives made quiet contact with Samsung's Semiconductor division. Samsung was wounded, but it possessed one asset no other player on Earth could match: sheer industrial scale. While rivals dominated specific niches, Samsung operated a massive, fully integrated network. It could fabricate logic wafers, manufacture memory, and assemble advanced packaging under a single corporate roof. On March 15, 2026, Broadcom chief executive Hock Tan and Samsung leader Han Zhonghee met via secure video link. Samsung pitched itself as the ultimate single-source solution. It offered dedicated capacity that TSMC could not allocate. Negotiations were brutal. Broadcom demanded strict yield guarantees. Samsung demanded massive long-term volume commitments. By the spring of 2026, the power dynamic began to tilt. Samsung shifted from a vulnerable giant into the capacity answer Broadcom could not find anywhere else. This scale of transaction reflects a deeper reality. The global chip industry is no longer governed by free markets, but by state power. On June 30th, 2026, the United States Department of Commerce approved a $4.8 billion subsidy package for Samsung under the 2022 CHIPS Act. This federal injection was designed to lock Samsung's advanced manufacturing inside the American-aligned technology bloc, bypassing the need to source critical logic and packaging from geopolitically exposed foundries. By securing these advanced nodes, Washington positioned the South Korean giant as an essential partner in the Stargate Project. This massive public-private initiative, backed by SoftBank's $100 billion commitment, aims to build a nationwide AI compute backbone, starting with a flagship data center campus in Abilene, Texas. Samsung's $60 billion Texas fab expansion became a key cog in this domestic hardware network, protected by federal security clearances. But across the Pacific, Beijing is funding a parallel technology ecosystem to completely bypass Western controls. Despite severe export restrictions and blocked access to extreme ultraviolet lithography tools, China is moving forward. SMIC is pouring $18 billion into a new 5-nanometer equivalent fab in Shanghai, fighting to scale production through multi-patterning deep ultraviolet systems. Simultaneously, Huawei received over $1 billion in state grants in 2026, using the capital to ramp up its Ascend AI processors to replace American silicon. As the global supply chain divides into competing empires, corporate neutrality has evaporated. Samsung's massive deal with Broadcom, a designer of critical American communication silicon, solidifies its placement. In a fractured global market, the Korean giant has made its choice, anchoring its survival to the Western technological sphere. The reaction to the July 25th announcement was instantaneous. In Seoul, Samsung's shares surged 12% in a single trading session, adding billions in market value as trading floors responded to the massive scale of the alliance. Samsung did not wait for the excitement to settle. The company immediately translated the paper agreement into concrete and steel, fast-tracking Phase 2 of its $60 billion Taylor, Texas megafactory to pull its operational target forward to early 2027. Simultaneously, heavy machinery rolled into Pyeongtaek, where Samsung pushed a 30% capacity expansion to secure 30,000 additional wafers per month. But physical fabs are useless without the minds to run them. Samsung launched an aggressive global talent war, raiding rivals for elite personnel. Headhunters targeted TSMC and SK Hynix, securing key talent like Dr. Min-Soo Lee from TSMC and Ji-Young Park, SK Hynix's lead HBM architect, with massive compensation packages. Samsung was mobilizing its empire for total war, treating rivals not just as competitors, but as supply depots for the human capital needed to survive. The Broadcom agreement draws a permanent line through the Silicon map. Samsung is no longer just a corporation. It is a mobilized actor, locked inside the American-led Semiconductor camp. Across the barrier, a state-funded Chinese ecosystem is rising, turning what was once a market competition into a permanent, structural division. Even Samsung's bitter domestic rivalry with SK Hynix has changed, scaling up from a regional feud into a battle to control the Western alliance's processing core. Now, as the borders harden and the factories run hot, one final, uneasy question remains. Can Samsung actually build the future it just sold? This alliance redraws the battle lines of a fracturing world. But in the Silicon War, dominance is never permanent. Only vulnerability is. If Samsung cannot deliver, this historic triumph becomes its ultimate trap. Drop your perspective below.